Hi, we are in the complete comprehensive example involving adjustment of capital, example sum 2. So let's go to the example. Example sum 2. Suresh, Ramesh, Mahesh and Ganesh were partners in a firm sharing profits in the ratio of 2:2:3:3. On 1st April 2019, their balance sheet was as follows. On the left side of the screen, we have the balance sheet, and on the right, the information given is as follows. From the above date, the partners decided to share the future profits equally. For this purpose, the goodwill of the firm was valued at Rs 90,000. It was also agreed that A. Claim for workmen's compensation reserve will be estimated at Rs 1 lakh and the fixed assets will be depreciated by 10%. The capitals of the partners will be adjusted as per the new profit sharing ratio. For this, necessary cash will be brought in or paid by the partners as the case may be. We are asked to prepare the revaluation account, the partners' capital accounts, and the balance sheet of the reconstituted firm. Now the point B, which says that the capital of the partners should be adjusted as per the new profit sharing ratio. This tells us that it's an adjustment of capital sum in this chapter, and it also says that the necessary cash will be brought in or paid by the partners as the case may be. So the adjustments need to be made through cash or bank accounts. So let's begin. We will solve the revaluation account. Immediately after the question, we will solve the revaluation account, the partner's capital account and the balance sheet, and follow it up by the working notes. So we'll go to the solution. We'll begin by the revaluation account. Particulars, rupees, particulars, rupees. The claim against the workmen's compensation reserve, it's given as Rs 1 lakh here. The amount of reserve is only 75,000. So we need to create a claim for another 25,000 rupees, for which I will debit the revaluation account to workmen compensation claim account 25,000 rupees. It also says that the fixed assets needs to be depreciated by 10%. So to fixed assets account, 10% of 6 lakh fixed assets appearing in the balance sheet, Rs 60,000, total 85,000. No other adjustments, so we have a final loss on revaluation of 85,000. By loss on revaluation transferred to partners' capital accounts. Suresh, Ramesh, Mahesh and Ganesh. The total loss 85,000 rupees, which is divided in their profit sharing ratio 2:2:3:3. So for Suresh, 85,000 into 2 divided by 10 is 17,000 rupees. The same amount for Ramesh, 85,000 into 3 divided by 10 for Mahesh, 25,500, and the same 25,500 for Ganesh also. So we completed the revaluation account. Let's prepare the partners' capital accounts. Partners' capital accounts. Left side debit, right side credit. We have particulars. Suresh, Ramesh, Mahesh, and Ganesh. And again on the credit side we have the particulars. Suresh, Ramesh, Mahesh, and Ganesh. We will bring down the balance of the capital accounts by balance brought down. Rupees 1 lakh for Suresh, 1,50,000 for Ramesh, rupees 2 lakh for Mahesh, and rupees 2,50,000 for Ganesh. We'll transfer the loss on revaluation to revaluation account. I'm scrolling the top screen down to the revaluation account. It's 17,000, 17,000, 25,500, and 25,500. The next thing which we need to deal with is Goodwill, 90,000. Let's go to the working notes and treat Goodwill. We have the working notes here. The first working note, calculation of gain or sacrifice for each partner. For Suresh, 2 divided by 10 old share minus new share 1 by 4, 1 by 20. It's a gain by Suresh. For Ramesh, 2 by 10 minus 1 by 4, a negative 1 by 20, gain by Ramesh also. For Mahesh and for Ganesh. For both of them, the old share 3 by 10 minus the new share 1 by 4. It's a positive 1 by 20. Both have sacrificed. So the working note 2, journal entry for Goodwill. We need to debit the gaining partner and credit the sacrificing partners. So the gaining partner is Suresh, capital account, debit. Ramesh, capital account, debit. To the sacrificing partners, Mahesh capital account to Ganesh capital account. For each of them, 90,000 into 1 divided by 20, which comes up to 4,500 rupees. So as per this, we need to debit Suresh and Ramesh with 4,500 each and credit Mahesh and Ganesh with 4,500 each. So let's do that. So this is our partner's capital account. Let's debit Suresh and Ramesh to Mahesh and Ganesh capital accounts. 4,500 and 4,500. And here by Suresh and Ramesh capital accounts. We'll credit Mahesh and Ganesh with 4,500 rupees each. No other adjustments are left to be made. We need to find out the adjusted capital of the partners. The top screen shows the partners' capital accounts, whereas I will do the working notes for adjusted capitals of the partners. 3. Calculation of adjusted capitals of partners. So for Suresh, it's 1 lakh rupees minus 21,500. Which is equal to rupees 78,500. For Ramesh, it's 1,50,000 rupees minus 21,500 rupees, which is equal to rupees 1,28,500. Mahesh, 2,04,500 minus 25,500 rupees, which is rupees 1,79,000. And for Ganesh, it's 2,54,500 rupees minus 25,500. 2,29,000 rupees. Now let's get the total of the adjusted capitals. We get 6,15,000 rupees as the total. Calculation of new capitals. The NPSR between them is 1:1:1:1. So Each partner gets rupees 6,15,000 divided by 4. So each gets 1,53,750. Next, fifth working note, comparing adjusted capital with new capitals. Suresh, Ramesh, Mahesh and Ganesh. We have the adjusted capital here and the new capital here. We first write down the adjusted capitals. It's 78,500, 1,28,500. $1,79,000 and 2,29,000. And as far as the new capitals are concerned, each gets 1,53,750 rupees. Plus for cash to be bought in and minus for cash to be withdrawn. So let's do the calculations. For Suresh, the adjusted capital is less than the new capital. So Suresh needs to bring in the cash. It's plus ₹75,250. For Ramesh also has to bring in cash. It's 25,250 rupees. Mahesh has to withdraw 25,250 rupees. And Ganesh has to withdraw 75,250 rupees. So let's insert this in the partners' capital accounts. By bank accounts, Suresh brings in 75,250 and Ramesh brings in 25,250. Withdrawal to bank accounts. Mahesh withdraws 25,250 rupees. And Ganesh withdraws 75,250 rupees. We'll insert the balance carried down, the new capitals of the partners which are in the profit sharing ratio. 1,53,750 for each partner. Now let's check to see if both the sides are tallying. Then we'll know if our arithmetic is right. Both the sides are tallying, so our arithmetic is right. So let's go down. Balance sheet as at 1st April 2019. Liabilities rupees, assets rupees. So we'll begin with the capitals of the partners. Suresh, Ramesh, Mahesh and Ganesh. 1,53,750 each. We already know that it will total to 6,15,000. Let's go to the question to find out the other items. Sundry creditors, 1,70,000 rupees, no change in value, and there is a workman compensation claim. Amounting to rupees 1 lakh. The fixed assets have depreciated by 10%. 6 lakh minus 60,000, which is 5,40,000 rupees. And the current assets the bank balance is part of current assets, so we need to make adjustments for the bank balance. The opening balance of 3,45,000. So the adjustments for cash are given. Suresh brings in 75,250, so plus 25,250 brought in by Ramesh, minus 25,250 withdrawn by Mahesh, and 75,250 withdrawn by Ganesh. So it comes back to 3,45,000 rupees. Let's check the balance sheet total. $8,85,000 on the liability side and $8,85,000 on the asset side. I'll remove the split and we can view the entire answer. So this was the question. We began with the revaluation account. We got a loss of 85,000 and we distributed the loss in the profit sharing ratio, old profit sharing ratio. We went ahead to complete the partners' capital accounts and also prepared the balance sheet. So these are the working notes. The first one was to calculate the gain and sacrifice for each partner. The second one was the journal entry for the goodwill. The third was a calculation of adjusted capital. The fourth was a calculation of the new capital. And the fifth was comparing the adjusted capital with the new capital to find out who brings in cash and who withdraws cash. So it will be better if we stick to this format of preparing the ledger accounts and doing the working notes at the end.